you need to come to the table with a certain amount of emotional wherewithal. So it's important as a bondholder to understand where your particular bond sits in the structure of the balance sheet and the hierarchy of the different creditors, and the ability of other creditors to kind of push around your security position in the event that the company struggles and has to go through a reorganization. So on a balance sheet, of course, the secured creditors sit at the top, the unsecured creditors are next, and then the stockholders are below that. Whatever residual value is remaining after the creditors are paid is to the credit of the stockholders. A recent example is a company that we had invested in by providing capital in the form of a convertible bond. It was an unsecured convertible bond, and that bond was treated pari passu with the other unsecured creditors of the corporation. At a particular point in time, the company needed some short-term financing, and as a result of that, we provided that financing, and in that negotiation, I insisted that I would only provide it in the event that our unsecured convertible debenture became secured. That was successfully negotiated, and then unfortunately at a later point in time, the company was forced into reorganization and was actually sold for a pot of money which gave the shareholders nothing and left the creditors fighting over the remaining capital, remaining assets. Our secured debenture was paid back in full, including our interest, whereas the other unsecured creditors had to take less of their original capital back in settlement of the reorganization of the company.